Hey everybody, Boris, let's speak at Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar from May 18, 2018. And the story in the calm dollar land was the bounce week. This was really the rebound week that we've been waiting for a while after just relentless and downward selling. It was interesting though because U.S. yields actually peaked out at 3% this week, but then they came off the highs, and I think that provided just enough of a respite for commodity dollars to kind of bounce back off of deeply oversold conditions. Do we have more to go? Sure, but just a little bit more, not really much more, especially for the Aussie and the Kiwi. Let's take a look at the levels here as far as they set up. The levels this week, we really tested this 74 level in the Aussie dollar, and that becomes essentially a double bottom, as you'll see on the charts very, very soon. In the caddy, it's a completely different story. As always, Canada is a stronger story than all the other two high yielders and its own story. There's going to be a tremendous amount of NAFTA news this week, which seems to be moving in a more constructive direction and therefore provides possibly more positive value for dollar CAD as we go forward. And of course, at the end of the week, we have the CPI data that should be helpful. But for now, this 127, very, very sticky support to the downside, have not been able to break that. That's going to be the key to turning CAD even more positive. And Kiwi dollar finding support at 69, but it looks very problematic. The RBNZ statement last week hardly gave the market a lot of confidence. And Kiwi still remains just kind of a sell the rally trade, although we do see a little bit of a bounce. This week, the data set is very limited in calm dollar land, with two exceptions. We have the Australian employment data, which comes out middle of the week on Wednesday, which we're actually bearish on because both the employment component of manufacturing and services declined. This could provide more downside action, but really, I think the downside action here is essentially a test of the lows rather than anything else. We do have New Zealand PPI data, which should be interesting to take a look at because we'll see if there's any potential for inflation. Inflationary pressures have really cooled in New Zealand. That's one of the reasons why the RBNZ can just essentially stay stationary for quite a long time. And then the end of the week, the really big economic event in calm dollar land is the Canadian inflation data. That looks positive. Because we've had a sharp rise in IV component PMI. The labor data was better than expected, and wages were really strong. Wage growth in Canada was really, really strong. So if we get positive Canadian inflation data, there is reasonable chance to think that we see 127 before the end of the week. As a matter of fact, the key trade for us this week, fundamentally and technically, is the short dollar CAD trade. We think that could be the most interesting trade as the week develops. So let's take a look at the take a look at the charts here and see how things set up on the calm dollar land. So first, let's start with the Aussie. The Aussie to me is interesting because obviously this 75, 74 level really proved to be the double bottom. It dipped, came back up. This is actually a pretty bullish technical formation. It sort of shows that the test here really got bought. Now we obviously going to have a lot of resistance at the 76 level, but it's possible for us to stretch out, especially if we get any kind of anti-dollar flows into the front of the week. Come Australian employment, if that disappoints, we probably could come back down, but it's in way, shape, or form detrimental. The Aussie has already sold off so tremendously over the last 3 or 4 months that any kind of negative news is just simply going to be a test of these bottom rather than I think a break at a bottom, unless you get super strong dollar moves. So overall, it still looks constructive, still has a potential here to extend. Any kind of a dip probably shows support underneath the 74 level as we go forward. Kiwi looks a little more problematic. Yes, there was a bottom at the 69, but it's a very, very thin bottom. And the key thing with the Kiwi that is very important to note is if this bottom, which got bought on Thursday, retraces, in other words, if we hit the lows back through 69, that's a very, very negative development, and that pushes us to potentially 68 as the next level. It really destroys that one last bastion of support that Kiwi has. And Caddy, closing out the week, just a little bit negative on the bounce back off the weaker than expected labor data, but overall, there was a big turn at the 130, a huge rejection of the 130 level, and I'm operating under the assumption that this is going to be the dominant trend to the downside. Unless we get hugely negative data on NAFTA, we have a reasonable chance, I think, to kind of return and ultimately really test the 27-26 corridor. We have a lower high here, a rejection of this move, and overall a much stronger fundamental tone for Canada than we have for anywhere else. Canada is basically the only other central bank in the G7 universe that would consider raising rates this year. So that puts a much stronger bid into the loonie than almost anything else. So yes, today this is a troubling candle for anybody who is short the pair, but not too bad. And the key thing is, as long as I think this whole 129 corridor remains, any kind of a bounce back here could get reversed. What would be really bullish is if we took out the lows here. The lows here are 2730s. If we take out this whole 2730s lows, it really opens up the way towards a 2600 move in dollar Canada as we go forward in the week ahead. So that's how the week shapes up. The COM dollars should be an interesting trade this week. Wish you guys the best luck, the best trading. Boris, over and out.